Hey everyone, welcome to another edition of our Smart Investing Weekly Stock Analysis. Today we're going to take a closer look at company Starbucks. They've been in the news quite a bit here lately. I was actually shocked when I looked at the price movement. I haven't looked at the numbers yet. I looked at a little bit of the price movement. Shocked by the number or the decline so far in Starbucks stock to start the year. But again, if you find this video helpful, you find it informative, be sure to hit that subscribe button below so you're informed not just about our Starbucks video, but the other ones we'll do here going forward. But with that said, let's talk about Starbucks. I know I have my opinions on the consumer side of it as well as the financial side of it. So we'll get into those.
Well, and Starbucks is one that, gosh, has been around forever. And I remember in the past, oh gosh, I'm going to say 10, 15 years ago, like, when is it going to be over for Starbucks? They have proven that they become almost a staple for consumers, that they will always go to Starbucks and buy that coffee. And again, you go by there in the morning, you see a line of cars out there. They have the customers that want to continue to do that. I kind of joke, I always get confused on what am I ordering here. I get all nervous when I come to the line, like, okay, I want a grande, non-fat, it gets all confusing, but people love that. It makes them special. I think now when I go in, I'll just say, give me a medium, see what they do. I don't know. Listen to me. But as far as the numbers go, I've seen that Starbucks is down. And could this be an opportunity, or is it still too pricey? I can't wait to look at these numbers.
Yeah, I mean, there's a lot going on with Starbucks right now. Howard Schultz, the big name CEO, I guess, calling the founder of the company, he's back now for his third time as CEO of Starbucks. And I'm going to say he wasn't welcomed with warm greetings quite clearly as the stock continues to fall. And one issue actually that has happened with Starbucks stock is he came in here and he said that stock buyback program, they kind of said they were going to buy back about $20 billion worth of stock and pay dividends over the next 3 years. He came in and said, nope, we're not doing that. That put pressure on the stock. The other thing that Starbucks is really dealing with right now is union pressure. And I just gotta say, why as a barista do you need a union? I'm sorry, I don't get that part of the business. I don't think that they're being, abused, being pushed to maybe injure themselves with heavy machinery. I could be wrong. I've never been a barista at Starbucks, but that just seems like it'd be not helpful for the employees.
And Jason, we've talked about the unions in the past in our social media posts and so forth, and how the union membership is way down. So I think they've been out there pushing. They're pushing on Amazon, pushing on Starbucks, and it's a shame. And I remember reading on Amazon, they're saying, oh, well, it's too hard, there's too much pressure. Like, come on. Yeah, I mean, you're not working in 100-degree weather, temperatures, and slave labor. I mean, it just, the unions need that membership, and that's all it's for, in my opinion, that they're pushing to get that membership on there. Same thing with Starbucks. You're in a very nice environment. I've never been in a Starbucks where, like, oh, I wouldn't want to work here. They're always beautiful, always friendly people. I think it's just a push on the unions, but it is pushing from the unions. And I think you're right, pushing down on the stock price, because either they're going to have to pay more or do something that the unions want, or there's going to be some type of fight or something that's going to cost Starbucks money. What a shame, I have to say.
Yeah, and I'm going to make one more comment on the union thing. I'm going to move back to Starbucks. Is again, it's a free market. And right now I think it's 11.3 million job openings right now. That's 5 million more than the amount of people counted as unemployed. So if you hate working at Starbucks so much, I'm pretty sure you can create some competition and maybe go to somewhere. I'm just going to pick out a place. I know there's this place called Lofty Coffee, Better Buzz. There's all these little new places that you can go to, and not have these terrible working conditions. I'm just not very pro-union for the most part.
And Chase, let's just bring up before we move on. I mean, the unions back in the old days in the 40s and so forth, they had terrible working conditions, slave labor, children working. It was terrible. You needed unions to fight for that. We don't have that now. And I think we also in the post talked about how much unions can cost somebody. I mean, I've heard numbers as much as $200 a month. I mean, that's just terrible. And what does the unions do with that money? Well, they keep the big bosses happy. We want to be careful. We don't want somebody coming to our office and giving us a hard time.
Yeah, no, absolutely. And one thing on the unions for Starbucks, it looks like more than 180 company-owned locations have filed petitions for union elections. That's a relatively small number, as there are 9,000 or nearly 9,000 stores in the United States. So about 180 of them have filed petitions for it. Not a huge detriment yet. One other thing that I would want to understand for this company is I believe they do have franchise run Starbucks, and then clearly the company runs Starbucks. What's the breakdown between those two, and what's the margins look like between franchise run and company owned Starbucks locations? And that's one thing I've always kind of questioned with Starbucks. I mean, if you go down the street here, I think you can throw a rock and hit 3 different Starbucks. They're everywhere, I mean, I've always wondered how much they're truly cannibalizing on the sales of one another.
They've been doing that for a long time, though. I mean, it's not just been a year or two, it's been years. You go to the Vons, there's a Starbucks. You go to the right, I'll say a tenth of a mile, there's a Starbucks. You go to the left, I mean, they're all over the place, and it seems to be working for them. But we thought the same thing many years ago, like, oh, this is not gonna be good, but they continue to have locations very close, very easy to get to a Starbucks.
Yeah. And last thing before we look at the numbers, I'm just kind of looking at the inflationary environment. You want to find companies that can raise prices over time. I'm kind of conflicted with Starbucks because I think they have the brand name, the brand equity that people would pay up for their Starbucks coffee. I mean, clearly they've been able to have that premium compared to a cup of Joe at home. But with that expensive coffee, if we really run into some difficult times, will people start to opt out of buying their Starbucks, or have they created that consumer type staple?
Very good point. Yeah, they may not say, and I have heard other people saying, well, I don't go to Starbucks as much. I bought my own cappuccino machine or whatever they have. But it's a great brand, and everyone knows that brand. And I gotta say, I do like one of their coffees once in a while. Once in a while is maybe every 2 or 3 months, maybe.
Yeah, I don't drink it. I drink my coffee black, so I'm kind of I'm not that exciting, but
You could pay $2 for what they call the Americana.
yeah, but then I could also just get a big bag of coffee and make it at home at that point. So,
There you go. There you go.
but anyways, let's get started with the numbers here on Starbucks. See if it's worth buying, selling, or if it's a hold at this point.
All right. Yeah, they're in the industry. No surprise here. Restaurants, only 0.9% shares short on the float there. So no big thing there. Maybe we can see that change in the future. Surprised on only a 71% ownership by institutional. I thought that would be higher. We do see a P/E ratio. Now, this is actually getting better, 21.5 versus 32.7 for the industry for the longest time. I think they were well above 30. So coming down with the decline of the share price. We do see price to sales 3.1. I'll call it the same as the industry at 3.0. Unfortunately, still no price to tangible book value. Means they have a lot of intangible assets on the balance sheet. And the problem with that is that if these unions come in, things happen, they may have to write down those intangibles. I'm not sure what they are, but that could really hurt even more. Price of cash flow looks good, 15.6 versus 17.5, and a nice PEG ratio going forward. And PEG is price earnings divided by growth, 2.2 versus 4.4. So looking pretty good there. The lower the PEG, the better. Well, gosh, look at these earnings growth. This is phenomenal. And I almost feel like there's something else going on there. Did they do some write-offs 1 year ago that made it so much of an increase here? And the earnings up 335% versus the industry at 84.5. Maybe something to do with COVID. But again, if you're going to invest in this company, you've got to know why. Those earnings are up 335%. Look at the 5-year, up only 12.9, more reasonable, but not as good as the industry at 17.7. And again, that's the restaurant industry. Sales climbing nicely, 27.3 versus 19.2. That's a positive. The 5-year growth looking phenomenal, 6.7 versus 1.4. And the analysts, the 5-year growth, they're looking for 11.4. Disappointing, not as good as the industry at 16.3. Now, you get a decent dividend from them, 2.5%. It's not too bad. What I like, only using 49% of their earnings to pay that out. We do see that they have a nice growth on that dividend of 5 years at 14.4%, double the industry. So it's nice to see a company growing that dividend. Take a look at the balance sheet. Not thrilled with a 0.8% current ratio versus 1.4. I hope they don't have a liquidity problem, but it's getting, you start dropping more, it could be a liquidity problem with the company. Not sure where their cash is going. Do see on their net profit margin 14.5% versus 9.5. That's pretty good. It means for every dollar they bring in, they keep 14.5 cents versus the industry at 9.5 cents. Return on equity, well, this is strange. A negative 51.9 versus a negative 162.6. Where's the equity going? What's going on with here? So you want to look into that to understand that number on the balance sheet.
Yeah, and you skipped over debt to equity was one of our more important ratios. You see here, it's not material.
You know what? I skipped over because I didn't see it there. You're right. It was just blank, so I didn't even see the debt to equity. When I do see now, it's just a little dash that they need to make that a little bit bigger. But yeah, that's terrible. So low current ratio plus a no debt to equity. You really want to check out the cash flow statement to see, is this company having cash flow issues or problems? I would hate to say it, but they could have some financial turmoil going forward.
Yeah, I mean, the big thing is, I've seen this before with restaurants when they have a lot of franchise run parts of the business, is they're what we call asset light. And it's something that I haven't really quite understood is, why do you have no equity just because you don't have assets? You shouldn't have as much debt or liabilities to create that type of balance sheet. So it is something that I'm going to say is not uncommon in the field, but I thought they would have more company owned restaurants where they would actually own things and they'd be a little bit more asset heavy compared to a traditional restaurant.
And Chase, it is important, you bring up a good point that if somebody is going to invest in this, make sure they do understand that they're an asset light company and a lot of franchises. So you do want to understand that more. Good point.
Yeah, and then let's look here at the current price, $79.50 for Starbucks. This is what I'm talking about. 52-week high, $126.32. Huge pullback there, right near the 52-week low is $78.92. You see this huge decline to start the year, down 31.7%. Not a great start to the year for Starbucks. You see over the last 10 years, they've done pretty darn good, up 210%. We know it's a big company with a $91 billion market cap. With that said, let's go forward. Let's go out to September 2023. I see estimated earnings per share $3.83 would give us a target sell price of $63.58. So still below that current price again of $79.50. I don't like to see that. I mean, I'm quite disappointed that it's not doing that well. The numbers don't look great. I think there's a lot of concerns. I talked about CEO Howard Schultz. Well, it's only an interim CEO. So they said probably around September, October timeframe, I believe it was. That's when they hope to kind of have him removed as CEO. There's a lot of questions in the air, and it's still not cheap.
And also too, the most dangerous, statement people make, investors make is like, well, how much lower could it go?
Yeah.
Well, again, it's down what we say 31% a year to date. It could go lower, and we won't buy it. We won't even start looking at the research on it till we see some good value. And based on the earnings, we'd have to see it down, I guess, below 50 before we got excited about it.
Yeah. I mean, I just, the coffee doesn't excite me that much. And unfortunately, the stock's not exciting me either. So I'd have to say, stay away from it.
Yeah, I kind of agree at this point. And I was hoping for something great. It's a great name, but don't overpay for any great name or great company, because it's, especially now, as you talk about inflation, labor problems, union coming in, too many problems with this company. I agree with you. Stay away from it.
Yeah. Well, thank you again for joining us this week for the Smart Investing Weekly Stock Analysis. Just as a reminder, this video is for informational purposes only and should not be used as investment advice. If you did find it informative, informational, be sure to hit that subscribe button below again so you're informed about our future videos. We try and do these on a weekly basis, try and cover different companies all across the spectrum in terms of industries, sectors, whatever it may be, valuations, buy, sells, holds. Again, be sure to hit that subscribe button. We'll see you next week.
Ready?